Okay guys, let's talk about Bitcoin. There's a whole lot here. I'm gonna try to do the most understandable possible overview, so let's get into it. Okay, this might be unnecessary, but it's gonna help later. We're gonna go all the way back to cavemen and early systems of bartering and trading. One caveman's like, I have a banana, and the other one's like, I have fire, and they trade or something, I don't know. But we decided we needed to have standards for such trades, thus gold! So we have gold, and we all know how much it's worth because the government sets the price of gold. So then we decided gold wasn't amazingly practical. We introduced paper money, which represents a portion of the gold. Eventually, governments stopped using literal gold that they store to back up paper money and use a system called fiat money. Not like that fiat. Fiat money is money that the government orders to have value, and all the people agree that it has value. Yay, value! The stability of the government helps the value, but really it's just that we all know and agree that this is legal tender, so that's cool. Then the internet, 90s, websites, AOL, Y2K, the future, that one car. People are like, ooh, wouldn't a digital currency be cool without a centralized financial institution, government, or overlord, just like online on our phones or something? And all these computer scientists were like, yeah, totally cool, would love this, but there's a problem which is called double spend. So we're gonna hop back to fiat money for a second. So with this system, you guys know, there's a financial institution like a bank, and there's you, and they know how much you have because of the bank ledger, so you can't just be like, hey bank, I have twice as much, because they'd be like, what, why? No. So the problem with digital currency is if there's no financial institution monitoring things, it's just like magic digital computer money, it would be very easy to be like, oop, I have so much of it, and you're just making up money. This is called double spend. 90s computer scientists were like, bummer, we'll keep thinking. Foreshadowing. So fast forward to October 31st, 2008, Wall Street's not having a great year. Panic, stock market chaos, massive numbers of gorillas were discovered in the Congo, housing bubble, etc., etc. But people are very disillusioned with the system and banks and this whole thing. And Satoshi Nakamoto, this man or woman or group of people or pot of dolphins, we really don't know because they're super anonymous and mysterious, releases a document in a small mailing list, which is now referred to as the white pages. But basically it lays out the founding principles and game plan for Bitcoin and blockchain. Big words, don't worry, we'll get into it, and we're going to start with blockchain. Basically, blockchain is like Ancestry.com. It's a log of people who in this case have owned an amount of Bitcoin, and it goes way, way back. It's going to be more helpful if we get into how it gets added to. So you probably heard the word mining thrown around. Mining is like these computers, or nodes as they're called in the Bitcoin world, do really intense brute force calculations to solve a complex equation, which requires a lot of computing energy, which we're going to circle back to. All of this computational stuff can be summed up as proof of work, which is pretty aptly named. It's just showing your work. But there are all these computers and nodes doing proof of work all over the world for these equations, and one computer gets it done first and get an answer that they think is correct, so they send it out to all the other nodes. Once 51% of all the other nodes agree that it is correct, the user gets rewarded for their effort with an amount of Bitcoin, and that transaction gets recorded and added to the blockchain like forever. So the blockchain solves for the whole double spend issue from earlier because this is the ledger. Like normally a bank would have is just the blockchain now. It's anonymous. You can't see who the names are of the people buying, just their public key, which is like a sneaky username, but it's public so you can see where and how much Bitcoin is moving around. So if someone tries to say, I have 3 times as much as I had, all the other nodes won't agree because it won't make sense. So scooting back to the good stuff, the actual Bitcoin reward. So these proof of work calculations are happening basically in 10-minute increments. So every 10 minutes, Bitcoin is being mined. The blockchain is getting longer. As of May of 2021, the reward for being the first to solve one of these computations is 6.25 Bitcoin. And as of today, which is May 19th, 2021, the value of Bitcoin is $35,395.80. So say if a little pterodactyl does all the computations and her computer is the fastest and all the other pterodactyl computer nodes agree and she gets her 6.25 Bitcoins, that would be worth $221,223.75, which is wild. So I want to jump back to the mining portion for a second because while it sounds charming that a ton of little computers are like racing and chugging along trying to win, it's actually like an insane amount of energy to build, power, and cool these computers. Literally more than the energy consumption of many entire countries. Bitcoin produces 36.95 megatons of carbon dioxide, which is like so much. I don't know why I did this math, but it's the size equivalent of 26.39 million beluga whales. And it's estimated that in 30 years, Bitcoin alone could raise the global temperature by 30.6 degrees Fahrenheit. These environmental impacts are also why Tesla has now stopped accepting Bitcoin as payment for vehicles. So Elon's not about it at the moment. We'll see what happens. So Bitcoin is, by its own declaration all those years ago on the white pages, a peer-to-peer electronic cash system. Quick review before we go. Peer-to-peer, it's sustained by all those nodes who keep up, maintain, store, build the blockchain, which operates as a public ledger. Electronic, it's all on the computers, we get it. Cash, it's anonymous, untraceable, but it's also decentralized and unattached to banks or governments or financial institutions of any kind. But it's also unattached to banks or governments or financial institutions of any kind. So yes, it's worth $35,395.80 today, but it's also been extremely volatile in perspective, energy inefficient and environmentally harmful, and it really benefits early adopters with tons of computational power. So that's Bitcoin and blockchain and money and beluga whales. There's so much more here and so many other cryptocurrencies. Dogecoin, we see you, but we had to start somewhere. See you Sunday!